Good afternoon, everyone. Welcome back. My name is Michael Naidrich, and I am the co-CEO of AmeriVet Securities, and I'm joined always by my partner, all things CFA, Fed, liquidity, rates, Gregory Faranello. Gregory, how you doing, buddy?
I'm good, Michael. Trying to get through the storm up here and
Yep,
working through it. Yeah.
yep. We're going to shift focus from snowblowers and shovels and storms, which we might have again next week, I'm hearing. And let's get right to the Fed meeting in general. This is again, they're never not important, but again, another important one. So I'd love to know your thoughts here.
Yeah, expectations, obviously, the pricing is for the Fed to be on hold here short term. If you look at the pricing structure overall, the market is saying the Fed is going to come down here this year. They're going to come down here pretty slowly, maybe by another 50 basis points. But with regard to this Fed meeting in general, no expectation in terms of rate move, and all eyes are going to be on, I think, Chair Powell, Fed independence, what's coming out of Washington, and what that means going forward.
Yeah, that makes sense, and I think the market is set up for that way, like you alluded to. Let's talk a little bit about rate structure, yield curve, especially the long end. If you can just dive into that a little bit.
Yeah, I mean, I think it's frustrating. I think the administration is a little frustrated that 10-year yields haven't come down, but they haven't come down for the right reasons, right? GDP is running really, really hot right now. Inflation is running above target. So I think they're trying to be a little creative in terms of the tools that they have going forward to make things more accommodative. Affordability is the new word of 2026. I mean, I think that's pretty clear. So, we have steepened out and we have favored that theme. We think there's more room to steepen out here because we think the Fed in 2026, we think they will continue to come down. It's been more of a bull steepening. Um, I don't like a bear steepening. And so I think, 10-year yields in and around here, 420, 425, we have favored. We traded briefly toward 430, but as long as the Fed is skewed to continue to come down on the short end, the long end will follow, but the curve should steepen out.
Yeah, it's really been interesting. And, what I was trying to think about as we were diving into this call was, look, you and I try our best to stay away from politics, and we'll continue to do so. But there is a reality here. And I was wondering, in general, with the marketplace, how you felt about, the Democrats are threatening a government shutdown or partial government shutdown with some of the uneasiness of what's going on in Minnesota with ICE and some of the protesters. It's not a political question. It's more of a what happens if they implement that?
Another shutdown?
Yeah.
Yeah. Look, it's not ideal. It really isn't. I mean, one shutdown was enough. Two shutdowns would be too much. My understanding is that, we're going to work through this, and that is the hope. The political dynamics you can't really predict, but you can already see it in the economic data when the government shuts down, things get a little bit more complicated. So shutting the government down is not it's really just not a good option for either party, Democrat or Republican. So I think we'll work through it. It is a short-term risk. There's no question about it, but I don't think we'll shut down again.
That's encouraging, and I'm glad to hear that. All right, so let's talk about the debt capital markets in general. Start of the year, the banks came out flying. I guess Citi and Bank of America still have not, or maybe are not going to issue, but all the other money center banks came out with huge deals. Goldman had, I think, a record deal for Money Center Bank, eclipsing Bank of America's deal from a few years back. What's your overall opinion of the debt capital markets, and how you think issuers are looking at the markets moving forward here as we end in January and head into February?
I think the markets are in great shape in general. I mean, we've been writing that and telegraphing that. I think the markets in general are in good shape. I don't see anything inappropriate about the rate structure right now. When I look at treasuries, and even if you look at credit, you look at municipals, I don't see anything inappropriate about this rate structure. So I think the market's in good shape. I mean, we hit this hiccup last year in April over tariffs, and now we are starting to get some dynamics around tariffs again. So there has been a little bit of volatility in general, but I think the market, I won't use the word immune, but I think the market has become accustomed to the fact that this is part of the equation in terms of how we negotiate ourselves, country to country. But I think the markets are in good shape, and I think it's going to be a great year despite short-term volatility.
Yeah, the resilience in the market is incredible. And, one of the things that I always look at is just the demand on these deals. And, especially these bank deals, the demand was outrageous. These prints were put up and tightened with, 4 and 5x demand. And that's incredible. And a little different than what we saw towards the end of the year, right? Because the end of the year, we saw a lot less issuances. It shut down a little bit. And I think, some of the investors had locked in a pretty good year. So they got pretty selective on what they wanted to partake in or not partake in. So I think, that had a little bit to do with it. But boy, it's incredible. I mean, I think we would have been busier today, even though the Fed's coming on Wednesday. But I just think the snowstorm really did, even though people can work from home, I think it did slow down the markets. And I actually anticipate a pretty busy day tomorrow, personally.
Yeah, no, I love that. I think you're completely right on point there. I mean, this was the weather not only here in New York, I mean,
Yeah,
across
it's
the
rough.
country. I mean, it was just, it was this was a big one for sure. And I've
Yeah,
seen
I won't
I
send
and
you I won't
I've
send
seen
you
a
a
lot.
picture from where I live. You won't be happy with me.
I I've seen a lot of storms. I'm still working through this one a little bit.
Yeah.
So
Yeah.
I think you're right on point there.
All right, so let's dive into one last thing as we wrap up here. Let's talk about, we're seeing new names now, and they're changing pretty quickly, and leaders are now followers, and followers are now leaders in this new Fed chair. So, let's talk about where you think we are right now. I know Rick Reeder's been a name that's getting hot here in the last week, and maybe I know you touched on it in the opening, but again, maybe as we end here, talk a little bit about where you see cuts, potentially after this meeting.
Yeah, so in terms of names, look, Kevin Hassett is a really, really smart guy. I think it's been made clear that the president wants him where he's at. Look, sometimes you need to be in the role that you're in, and it's not transferable. And, Treasury Secretary Scott Bessent is doing a fantastic job, in my view. And so, we're left with a couple of names. BlackRock CIO, Rick Reeder is definitely seems to be coming along the way here. He's a very market savvy guy. He's a different type of candidate. And my sense is the president may want a different type of candidate. So, but it's hard. Look, it's hard to predict. I mean, we have favored Fed Governor Chris Waller, and we think he is not only a good economist, but he's forward looking in terms of, and he's practical in terms of how he looks at the economy. But I think in any way you shape this, in any way you look at this, the Fed committee is going to become more accommodative over time. Um, Rick Reeder would be a great Fed chair. I mean, he understands markets better than anyone. He studies like I do. He puts in the time, and he understands markets across the board. And he's managed, a lot of people over time. So he understands the administrative side to it. And there is an administrative side to this Federal Reserve. It's not all about, what do you think rates are going to do next month or the week after? You have to manage an organization. So we'll see. It's going to come. It's coming soon, I think. And look, all the candidates are great, and I think whatever choice the president makes at this point, given the candidates that I'm looking at, I think it's going to be fine going forward.
Yeah, I think it's interesting. The one thing, and I know you've been, very strong on Wallers from the beginning, and I still think that's a real candidate name there. Um, I've said this, and I think you agreed with me. Besant's going nowhere. He is just too critical to everything that goes on in that administration. He
Yeah.
is the voice of reason. He is the voice of strength, both globally and within the president's office. And that would, I believe, as great of a job as I think and as capable as I think he is to do that job, I don't think I still stand very strongly that he can't go anywhere. And, it would be interesting if Reader got in there because to your point, I mean, there's few men that are as well read and studied as that guy is, in this particular arena. So time will tell. All right, so here's where we'll leave it today, Gregory. We always say that to all our clients, Greg is more than happy to get on a call or a Zoom, but I'm sensing that Greg is willing to fly anywhere that is warmer than where he is right now. So if any clients would like to see Greg and hear what he's thinking leading into this end of the first quarter here or middle of the first quarter here in the second quarter, he's fully available. And Greg, I hope all of our clients that are in the eye of the storm stay safe. And I guess you'll probably go out and shovel again for the 13th time.
Yeah,
Um,
pretty much.
Pretty
Yeah.
much, but
The warmer the better right
yeah,
now.
yeah.
Yeah, for
So
sure.
I always appreciate us doing this. I always get educated, so thank you very much, and I look forward to the next time, bud.
Thank you, Michael.